Well, hello everyone and welcome to Momentum Channel. My name is Mo, and in this video, we are going to be taking a look at some of the best balanced all-in-one ETFs or exchange traded funds. This is a perfect video for Canadian investors in looking for a way to have their diversified investment portfolio set up through a balanced approach to investing. Let us explain a little bit what we have in mind with a balanced all-in-one ETF and what that is all about. If you recall, a while ago, we actually posted a video whereby we focus on all-in-one ETFs, but the focus there was on growth ETFs. Those were the all-in-one ETFs, exchange traded funds, whereby the focus was closer to 80 to 100% emphasis on equities or stocks with minimal focus on bonds or fixed income. As a result of that, there is higher volatility with those type of exchange traded funds, but the trade-off is that for the long term, over the long term, the chances are you're going to have higher returns. So higher risk and higher reward is the way that typically pans out. Of course, you have to be comfortable with the higher risk and more volatility when it comes to your investments. The other categories that we talked about in one of our past video was there is also a balanced approach, which is the focus on this video, as well as fixed income and conservative video. The focus, as I mentioned for this video, is on balanced focused ETFs, all-in-one ETFs, whereby the proportion of ETFs for equities is around 60 to 70% exposure, and the remaining 20 to 30% exposure is for fixed income and bonds. As a result of that, there's less volatility compared to high growth all-in-one ETFs. Be sure to check out that other video if that's something that interests you when it comes to high growth ETFs. I will definitely leave a link in the description of the video as well for easy reference. But let's get into this video. Before we can go too far though, just a quick recap. All-in-one ETFs essentially is one exchange traded funds, whereby by selecting that one ETF, you get exposure to a basket of different ETFs within it. And as a result of that, it gives you more diversification. It's kind of a way for you to take into account that factor investing when it comes to investing in different, whether it's emerging markets, US, Canada, small cap, large cap, and all of that. That's a way for you to get that instant diversification by just buying into one ETF. And on top of that, it also offers you that automatic rebalancing, making it a lot easier for investors that do not have the time to actively manage their portfolio. Obviously, given the nature of the ETFs, you don't have to pick any winning stocks. Here, you invest in the ETFs. All right, let's take a look here and what are our top best balanced all-in-one ETFs. On top of the list, you see we have VBAL or Vanguard Balanced ETF Portfolio, which holds 7 Vanguard ETFs as part of it. Here you get 60% exposure to equities versus 40% exposure to bonds. The inception date for VBAL was at 25th of January of 2018. You'd see here the distribution yield here listed. The distribution yield, or aka that dividend kind of distribution that you're getting here from this ETF, is at 1.74% annual yield, and it is paid on a quarterly basis. The assets under management here is $2 billion, and the management expense ratio is at 0.24%, which means that if you invest $10,000 with VBAL, in 1 year, the fee that you'll be paying as part of the management expense ratio is only about $24. Quick, kind of a low fee for having the convenience of not having to deal with picking stocks or having to rebalance your portfolio. In terms of the historical returns, the 1-year return for VBAL is showing to be 12.66%, and the 3-year return annualized is at 8.55%. That's 8.55% return per year over the past 3 years. Next, we have XBAL, or iShares Core Balanced ETF Portfolio. It holds 8 iShares ETF as part of it and covers 60% of equities versus 40% of bonds. And the inception date here was 21st of June of 2007. It's one of the oldest all-in-one ETFs when it comes to balance. In fact, it's the oldest in this list that we are reviewing it. It does pay a distribution yielding 1.43%, and it's paid quarterly. The assets under management here is at $816 million. The management expense ratio for XBAL is at 0.20%, so slightly lower than Vanguard. The 1-year return here is showing to be 13.28%, and the 3-year annual return is also showing to be 9.39%. Next on our list, we have Horizon's Balanced Tri ETF, HBAL. It has 8 Horizon ETFs as underlying holdings, and it has a little bit more exposure to equities. In fact, here we have 70% exposure to equities versus 30% for bonds. The inception date being at 1st of August of 2018. If you look here, that extra exposure to ETFs is actually really translating into higher returns. The 1-year return is 16.94%, which is higher than any one of these 4 that we are going to review here. And the 3-year annual return is also highest at 11.19%. So that's really points out the picture of when the stock market typically does well over a long period of time. For the most part, more exposure to equities could result in higher returns for you. But of course, it does have its higher risks involved. For HBAL, the assets under management is at $123 million, and the management expense ratio is the lowest at 0.15%. Next, we have BMO Balanced ETF with ticker symbol ZBAL. It has the 9 BMO ETFs as underlying assets here. If we look at the exposure in terms of the equities versus bonds, for ZBAL, we have 60% exposure to equities and we have 40% exposure to bonds. The inception date for BMO Balanced ETF was at 15th of February of 2019. Looking at the distribution yield for ZBAL, it is showing 2.45% annual return, but it is paid on a quarterly basis. The assets under management here is at $116 million. Next, we're going to take a look at the management expense ratio for ZBAL. The management expense ratio is at 0.20%. And lastly, if you look at the return for ZBAL, the 1-year return is showing to be at 11.52%. We do not have the 3-year annual return, just given the fact that this ETF was incepted not 3 years ago, in fact less than 3 years ago. As a result, we don't have the annualized 3-year return here. There you have it, folks. A quick look at the 4 balanced ETFs, all-in-one ETFs for investors. Just to quickly bring to your attention, as I mentioned earlier on, we did put together another video whereby we looked at the high growth all-in-one ETFs, whereby the exposure for them is about 80 to 100% equities in the ETF versus only about 20 or even sometimes 0% in one of the ones that we review, exposure to actually your bonds or fixed income. I think that's going to be an interesting video, especially for those investors who are looking for more aggressive, higher risk, higher reward type of investments. I will leave a link to this video at the description of the video, as well as add a card link, so you can be sure to check it out and watch that video if that interests you. I hope you found this video beneficial and you gained something of value from it. I put a lot of time and effort to put this video together, so I hope it actually brought you some value and you gained something that taught you something of value. If that was the case, I really appreciate if you can give this video a thumbs up. It really means a lot to me and really helps the channel to grow. And of course, feel free to subscribe to Momentum channel. Here on Momentum Finance and Stock Investing channel, we post every week several videos about investing, including investing in the stock market, real estate, and other means, as well as ways to reach financial freedom. Let me know as well in the comment section down below if you are invested in any of these ETFs or any other all-in-one ETFs for that matter. I would love to hear from you, so be sure to leave us a comment down below. With that, thank you so much for watching this video, and I hope to see you next time.